254,000, and that follows an unrevised, unchanged, unaltered 265,000. So, of course, we're down 11,000, and this puts us in that zone since that we haven't seen really since the early 70s. It's obviously not bad news if you're studying the labor market. The real issue continues to be how to get more horsepower out of the economy. We're in the winds of change. The equity markets are tasting something that may create a better landscape, a more fertile landscape for business growth, productivity, and of course with all that most likely comes higher price pressures. We've seen the reverse of that when everything was weak and pricing pressures were low. Is there any evidence that this is actually occurring? Well, you know, if you have both branches, both chambers and the executive branch of the same party, and everybody seems pretty much to be in agreement on things like corporate tax reform, general tax reform, how we deal with health care costs, I think the stock market's onto something. But I think what gives it credibility is what's going on with rates. We've seen a lot of faux moves where we tried to convince ourselves that there was really growth and that rates were really going to move up for the right reasons. I think right now we are actually seeing that. Look at Boone yields. They're back to 30 basis point. Italian yields on 10s getting close to 2%. Gilt yields, once again, testing levels we haven't seen really since Brexit. So all parts are moving in a logical direction that historically means the forward-looking mechanism of the stock market actually works again. It's like somebody put the battery back in that Energizer bunny. So, of course, we'll continue to monitor for all our listeners and viewers. It certainly looks to be continuing as we're going to test historic levels in equities today.